Hi, welcome to this video day. It's the 18th of April. It's Monday, the Sol Weekly Forex forecast. In today's video, we're going to pick out some pairs which we think could offer really good risk-reward trading opportunities. We've got plenty of charts to look at. Go and take a look at them in just a moment. Now, over the last week or so, volatility has dropped down in the FX markets, but it's not going to stay low for long. There's huge problems in the global financial system, and that is going to cause big volatility in the FX markets. There's a lot of pairs that are at key levels of support or resistance, and that means we can key off those levels for good risk to reward trades. Now, what we are going to do is we are going to go and look at the pairs, but just before we do so, please always keep in mind, it is my view as of right now. It can, of course, change in line with the market action and conditions. If you want to learn all our trading techniques and check out daily technical sentiment analysis of 14 FX pairs, all you need to do is go to the link beneath this video and you can get live access to our member center. You can also join our Facebook group of traders and follow our Facebook page. I've been doing some updates in our member center, so I'm going to use the charts from there. So let's go take a look at the trade setups. First chart is Euro USD. Now, in terms for anyone new to our videos, we've always got a bias from the sentiment, big fundamentals behind the chart before we do our technicals, so we can keep them simple and just focus on the big levels which we think are going to be important to major institutions. Now, in terms of this pair, we think limited upside and a lot of potential downside. Okay, now just before I go through how you could play this trade setup, I just want to show you a chart here, which is to do with where the market sees interest rates in a year's time in various different countries. Now, in terms of Eurozone, they see rates at 1.25. Okay, you can see it here. I think that's way too optimistic in terms of what's going on in Eurozone. I mentioned this in previous videos, which you can check. Eurozone is on the verge of a recession. The Russia-Ukraine crisis has caused massive problems, particularly the spike in energy prices. And the ECB made it clear last week that they're very focused on growth and not raising rates too quickly to contain inflation. Personally, I think that's a mistake. Lead to problems further down the line. ECB are going to try and basically make sure the zone doesn't go into recession. I think that they'll fail, and obviously inflation is out of control. That will cause problems later on. So I just don't see much of a rally in the euro, and speculators still hold a sizable long position. Now, in terms of Euro USD, let's just go back to the chart. You can see our trading at 110.80, and it's gone down about 300 pips from the entry. But I think there's potentially another 800 to go. Now, in terms of the euro, if you wanted to play this trade, I would just recommend, if we open at a new low, basically put a short trade in. If we were to rally above first level resistance, sell back through it, or come off this level here. The 109 level is the key level, I think. Now, in terms of our stop, it's still at 109.60. I'll probably bring that into about 109.40. Okay, so if you take the risk, it's 150 pips to longer term make 800. There's one thing that could rally the euro, in my view. That is the French elections. If Macron were to win, you'd see a relief rally. I don't know how far it will run, but it would be a selling opportunity. Okay, if Macron were to lose, the euro would have a really big hit to the downside. Now, in terms, if you look at, sorry, I need to go to the monthly chart. If you look at the monthly chart, the euro's trending down quite nicely from a long-term perspective. In our last video, we were saying, we hopefully would move away from the 110 level, and we have. We moved, a couple of hundred pips away from it. The next major support is here at 105. Okay, now in terms of this chart, that will be December 2016 lows. I personally think we could overrun this level of support. The next level of support is down at par, which was hit, I think, in 2004. Things are that bad in the zone. Also, if we were to get risk off in the markets, to say big sell-off in stock markets, etc., the euro downtrend would accelerate. I'll talk about risk off and a potential sell-off in stock markets in a moment. So, yeah, fairly simple trade setup for us. Yeah, I've already said I'm a lot of downside and limited upside. Now, the next chart I want to look at is AUD USD. For on AUD USD, the AUD mounted a really big rally from the 70 level, came up, she reversed there. We took a sizable short position as we came down, only to see it taken out the market, give us a loss. Then we ran onto the upside, but we managed to sell off this spike tail, 76.60, and now we're 300 pips lower. So that compensates a little bit for getting hit on that move up. Now, I think we're going to see a sizable move to the downside. A lot of people are saying, well, Australia, things look really good for it from an interest rate point of view, and also you got elevated commodity prices. So if you look at interest rates, market pretty optimistic about Aussie rates going above 2.25. We don't share that optimism, but even if they do, it's in the price. US is slightly ahead, but I think when you're looking at the outlook for the USD, you've got to look at the Fed and the reduction of the balance sheet. That's taking money out of circulation if they do it. That's worth probably another 0.5 point on the upside in terms of it's equivalent to 0.5% interest rate hike. Okay. Now, in terms of the Aussie dollar, commodity prices are elevated. However, if you've got a slowing global economy, that is traditionally, historically bearish for all commodity currencies and emerging market currencies. Now, this is a chart that shows Goldman Sachs' view of where the global economy is going, and they're very bearish, much more bearish than other large central banks here and the Bloomberg consensus. And Goldman have been pretty right or pretty accurate about global growth in the past. Okay, if you read the media, a lot of media do not see a global recession coming. I think we could well get a global recession. So this is not good for the commodity currencies, i.e. the Aussie dollar and the others we're going to look at in a moment. Now, in terms of AUD USD, sorry, I need to go to this chart first. How would you play it? If we were to rally above 74, round number, I would just sell back through the round number or try and come off this second level resistance. Okay. If we were to open lower, I'll just take a short. I think we're going down to 72, then 71, may even overshoot to the downside. Let's go to the monthly chart. You kind of got 5 bodies roughly at the 75 level. Okay, this one, or this month's candle, has come down a bit. It's on its lows. You got 71, but you also got 70 there. Okay, so we could overrun to 70, so another 350 pips, hopefully, to go. If we'd get risk off, we'd go to 65, and I think there's potential for that. I just want to go to, where is the chart? Here it is, sorry. SPX. Commodity currencies tend to be impacted by stock markets. Okay, if stock markets are strong, that normally helps the commodity currencies. If they're weak, it doesn't. This is the daily chart. Okay, now you've got a rally. The rally has failed. Okay, traders have, for years been buying the dip in the stock market, but how long will that continue with higher interest rates coming? That's bearish for stocks. Inflation is obviously not good. And I just think the stock market could break. It's something to be alert for. It might just chop around. Okay, if it chops around, it won't hurt our USD bullish stance. But if we break down, and we can see how overvalued stocks are from this chart. If we look at this rally here, and we got back above 2.4, we accelerated off the upside to 4.8. That's 100% rally What drove that rally? It was driven a lot by stimulus and the expansion of the balance sheet by the Fed. They're withdrawing that stimulus. It is extremely bearish for stocks. Stocks extremely overvalued. If we can get some downside going, then we could get back to around here, I think, maybe even lower. And a lot of people say, oh, well, stocks are not overvalued. They are. Price earnings ratios are at bubble levels. So look for a potential correction in stocks. That's heavily bullish for the USD. I'm not saying it's going to happen in the up and coming week, but give the USD an additional boost. Right, where do we want to go to next? I want to go to USDCAD. Right, USDCAD. We had a big sell-off here. Then we kind of chopped sideways with two tails, spiking lower. Then the USD recovers. Last week we see this red candle here, which was on the Bank of Canada. They raised rates by 0.5%, okay? But the USD has since worked its way back up. Now, I personally think the good news is in for the CAD. If we can just get a little bit higher, take out these two bodies here. I haven't drawn the line in the tail here. Really, it's just above today's high. I think we'll gravitate up to chart highs. It's been fairly choppy price action in this one, but I think we could now see a smoother trend emerge to the upside. Let's go to the next pair, which is NZDUSD. Again, big rally up, exhaustion, and now we've come down. Okay, terms of this one, how would you play it? You could come off the 68 level, okay, or just take a lower, a new low basically, then see if we can move to the downside. Plenty of downside, the risk not too much. If we do start moving lower, the stop can be tight behind the 68 level. 65 is target. You can see it monthly support. I won't show you the monthly chart. If we did get big risk off, we could run on to 60. In terms of the commodity currencies, the CAD, I think, is now going to start going down on the USD. I think the Aussie and the NZD are already in downtrends. Next pair is going to be USD Swedish krona, and I did a video on this which you can check out. Where is the chart I looked at earlier? Here it is. SEK market looking 1.75% in terms of interest rates in a year's time in Sweden. We do not see that happening. You can check out my previous video on why. We think the Swedish krona is, sorry, I'm trying to find the page, going to go back up to chart highs. So basically we're in at 950. Okay, so we haven't seen much movement, just grinding higher. But if we can break this resistance level here, above this big red two bodies, and the bodies over here, then hopefully up to 10. The Swedish krona is very correlated with risk on, risk off. Things are not great in Sweden. That interest rate sort of view that we could go to 1.75, just don't think will happen. So there's another one to look out for. Right, this pair is USD Polish Zloty. Now, in terms of USD, it had a massive move to the upside when the Russia-Ukraine crisis came into being. Then there was optimism about peace talks. Dollar was a bit overbought anyway. Dollar fell quite strongly. Then it got back above 420. And then we kind of got indecision. Low volatility, tight sideways channel. If you wanted to play this one, it's just through the 430 level, say 431, something like that. Then look for it to go back up to chart highs. If you do a tight range breakout, if it doesn't start to move the way you think it should, I should accelerate away and just freeze the trade out. Right, just a couple more USD pairs and I'm going to cover some crosses. And in terms of Russia, Ukraine, it's just going to drag on. It's going to get worse. Poland very exposed in terms of trade to both Russia and Ukraine. Obviously, refugee crisis as well. Now, where are we going to go next? I want to go to USDMXN. Now, in terms of this pair. Obviously, MXN isn't exotic. It's an emerging market. If you've got a global contraction going on or risk off, it is the emerging markets that get hit hard. But yeah, Mexican peso really pushed the USD down. We bottom here, up, come down, we bottom again. Look at this 20-day moving average, okay? Basically, rallies were held by here, and it's still being held. But if we can break above the level, look for an increase in volatility. If you get a nice blue, then the stop, I've got mine still back behind this level here. I'll bring the stop tight in behind this first level. We see a nice blue, looking for 21, then 21.50. Right, last USD pair, and this one I really do like. I did a video on this one a couple of weeks ago, but it hasn't come to fruition yet. In terms, when I did my video, we were down here, and we could see that speculators got a really, really big short position, okay, against the USD. So heavily short the USD. We did rally up. 20-day moving average green line. See, we can't get through it or hold above it. We come back to support again. Tried to get through it there, came back. We're through it today. If we can close above the 20-day moving average, we should see a really big rally. A huge amount of speculators are short the USD. It's the biggest short position since 2017. So there, the USD pairs I'll look at. Now I'll look at some crosses. I'm going to look at some GBP crosses first. Right, GBP AUD, and we did have a massive sell-off in the British pound, and market very bearish of the pound, saying that yeah, Russia-Ukraine crisis, big impact on the UK. It's not as big an impact as the market has priced in, and also they're saying yeah, Bank of England will not raise rates aggressively going forward. The Bank of England have made it clear they will. You just have a massive sell-off, then we double bottom, get above the 174 level. We're now above 176. I think 176 is good support. We're at 176.78. So if we can get through the next round, number 177 through the high, look for us to gravitate up to 180, then 182, stop back behind the 176 level. The other commodity currencies against the GBP look good to sell. But the one I really like at this moment in time is this one, GBPZAR. We already know that yeah, speculators are heavily short of the USD against the ZAR. It's another big short position in terms of speculators being short the GBP. It's kind of choppy kind of pair, but goes down, bit of sideways. That blue there, I think, was the exhaustion of selling. You got three little candles. Here's the 20-day moving average, which hasn't been touched for a while. That gives way in the double trend line resistance. You can see the levels I want to go long at, my stop up here. We should see follow through buying and speculators get taken out on stop. So yeah, really like the look of this pair. Now let's have a look at some JPY pairs. Right, we are on AUDJPY. Now in terms of this big move up, I didn't see it running as far as it did at all. You get a kind of gentle move up here, but as soon as we get through 86, it's a really big move. Then you get tail exhaustion on this blue that I'm highlighting. Now, we know, most people know why the yen has been weak. It's to do with interest rate differentials. And if you can see here where the market thinks Japanese rates will be in a year's time, you can hardly see the little blue block. Obviously, all these currencies have got an advantage interest rate-wise, and that's what the markets have focused on. But I think that's getting priced in now. And the price action is really interesting here. After this exhaustion, we come down. Then we rally back. Two tails top out into 94. Down. And then look, 1, 2, 3, 4, 5 candles that can't get up to the 94 level. So it's a bit like USD PLN. You've got low volatility and sideways action. Just take a break from the range. In this case, we're bearish. We get through 93, then I think we could run down to at least this level. I know there's a level here, but I think the yen is just so oversold. The speculators are so short the yen. We should see a really good correction. Now, it's all been about interest rate differentials. Okay, market has ignored the yen's safe haven status, but I think that could come back into play and also support the yen. Someone was saying to me, I can't see any reason to buy the yen whatsoever. That could mean the bad news is in the price. I also want to look at another JPY pair, which is NZDJPY. Again, kind of gentle move up, then the acceleration, exhaustion on this blue here, down. Then look what happens. We get tail above the 86 level, can't hold. Again, can't hold. 3 little candles. I think it's a good sell through the 85 level. Okay, so below this 20-day moving average, which hasn't been touched since March, if we break it, then I think we could go down to 82.20, possibly a run on even further to the downside. But the yen, didn't see that big move up running so far. But now I think it looks like it could be exhausting. And I think the risk reward is pretty good on yen longs at this moment in time. I just want to finish up with some charts in relation to what's going on in the global economy. Sorry, where are they? A lot of people say, well, inflation might abate, and central banks might not have to raise interest rates so aggressively. I just don't see that happening. The disruption in terms of what's happened in terms of commodities because of Russia and Ukraine is huge. And this is a frightening chart. It shows US fertilizer costs against food prices. They're going to play catch up. You are going to see hunger in many nations around the world. And even in developed nations, people are going to get hit hard in the pocket. Inflation is not going away. Okay, you could say, food prices are not core inflation. It doesn't matter. Central banks have to act. I also want to go to another chart quickly before I finish, which is to do with supply chains. China, I was watching on the news, this lockdown in Shanghai. It's the world's biggest port, isn't it? You can have serious disruptions in terms of goods. Again, that's inflationary. When you look at the videos, I mean, the lockdown is severe. It's like something out of 1984. Also, China is slowing up, and China is, if you think about it, the nation that has driven global growth in recent decades. The big growth is over, which again is bad news for the global economy. I think it'll be tough for the global economy to avoid a recession. I just see risks everywhere going forward, and that will favour the positions that we've picked out today, if our rather pessimistic view comes to fruition. Okay. Anyway, there's some pairs to look at. I hope you found the video useful. That's it for now. We'll be back next week with a forecast. Thanks for watching. Take care.